So a mysterious wallet just spent about $50 million buying 25,000 Ethereum in a single transaction. No announcements, no press releases, new wallet, no history, OTC size purchase executed on-chain specifically to avoid moving the price. Someone who wanted a $50 million position in ETH, and they wanted it badly enough to build it quietly where everyone else was calling the asset dead again. The same month, ETH ETFs turned net positive after 2 months of sustained outflows. The same month, the ETH BTC ratio recovered 16%. The same month, the 41 million ETH, or 34% of the entire supply, ended up being staked in the staking contract, all-time high for staking. Something just flipped. Price hasn't really caught up yet, and here's what the data actually shows. First, the pain that built this setup. If you held ETH through really the last few years, you need to hug or something, man, because you know what pain is. But this year specifically, 2 months of ETF outflows, the ETH BTC ratio grinding towards generational lows, Bitcoin getting the headlines, the institutional validation, the strategic reserve conversation, ETH just sitting there saying, "Don't forget about me." But it had more transactions, more stablecoin value, more developer activity than any other chain, and a price chart that looked like a slow surrender. The narrative became self-reinforcing. ETH is broken. The fee model's dead. The burn is dead. Major podcasters giving up. Layer 2 is extracting value without returning it. Even the longest tenured ETH bulls really publicly questioning whether the token captures the network's value at all. That capitulation, that kind where even the deepest believers start to doubt, is precisely what produces the setups that matter. Not because pain predicts recovery, but because pain is what drives RSI to historic lows, drains ETF flows to zero, and pushes the ETH BTC ratio to levels where the risk reward finally flips and attracts the money back in. The smart money doesn't buy when it's comfortable. They buy when you're ready to give up. July's data suggests they just did exactly that. But here's what makes this specific reversal different from every previous ETH false start. Because there's a supply dynamic forming underneath the price action that has never existed before in this asset's history. Once you understand it, the $50 million mystery wallet, Tom Lee's relentless weekly purchases, it all starts to look less like coincidence and more like coordination around one specific thesis, the supply crisis. 41 million Ethereum staked, 34% of the total supply, all-time high. Every ETH that enters staking leaves liquid circulation and can only exit via a tiny little window that if everybody wanted to leave would take almost 3 years to clear out. 3 years. Can't be sold on exchanges tomorrow, can't be lent out, can't be used as collateral without a liquid staking derivative on top of that, which some of those will have, but okay, sure. The liquid supply of ETH actually available to buy is shrinking structurally while institutional demand turns back on simultaneously. Bitmine alone has staked nearly 4.9 million ETH, generating over $250 million in projected annual staking revenue at current prices. That's not bad. All flowing to a single corporate treasury without requiring the asset to appreciate at all. The buying thesis isn't sentiment dependent, which means that the purchases don't stop when the price is flat or falling. Now add the ETF flows. July net positive, about $365 million. ETH ETF products outperforming Bitcoin ETF products on multiple days during this month. Morgan Stanley launching low-fee ETH trusts with staking yield passed through, capturing institutional demand that couldn't access this yield through traditional products before. Robinhood Chain went live. A new Ethereum Layer 2 giving 23 million stock traders access to on-chain finance denominated in ETH. 24/7 tokenized stocks and ETFs. Volume exploding from week 1. Less liquid supply. More institutional demand. New use cases live simultaneously. It's all not narrative, guys. This is a story here. It's crazy. That's supply and demand arithmetic. If the ETH setup just convinced you to act, of course, you need a platform for when the trade actually moves. That's Kraken. Mystery wallets don't drop $50 million on exchanges that go down during volatility spikes. Serious money moves on serious infrastructure. Kraken's been around for over a decade. I've been using them since 2019. They're regulated, they're audited, customer funds intact through every crisis that this market has produced. They've got options trading, they got prop trading, they got stocks on leverage, deep crypto liquidity available in most major jurisdictions, including the USA, the UK, EU, and most others. The ETH BTC ratio, the MACD cross is live, supply is shrinking, institutional demand is turning back on. When the move happens, you want to already be there. Sign up using the link down below and get your Kraken account right here. Okay, so look, let's be specific about the accumulation pattern because the behavior matters as much as the numbers. The $50 million mystery wallet, it's a huge purchase of ETH. July 27th, around $1,968 average. New wallet, no history, executed on-chain rather than through an exchange. That's the signature move of someone who wanted a large position without telegraphing it to the market first. And to be clear, this is not the only whale. There have been many such buys. Whales out here grabbing Ethereum in 10K ETH clips. Crazy. Then there's Bitmine, 5.78 million ETH. Weekly purchases continuing regardless of price action. A treasury strategy explicitly built around staking yield rather than just price speculation. So the accumulation is mechanical, not emotional. It doesn't stop when sentiment is bad because the thesis was never about sentiment. Two separate large buyers, different strategies, different time horizons, both accumulating in the same July window while ETF flows were reversed to the tune of $365 million, and the ETH BTC ratio recovered 16%. The ETH BTC ratio is sitting somewhere around 0.03, still well below the 2025 peak, near 0.077, meaning that even after July's recovery, ETH has only reclaimed a fraction of what it lost relative to Bitcoin. The gap, that remains. That's the opportunity, or the warning, depending how you see it, depending on which thesis proves correct. 3 weeks ago, a bullish weekly MACD crossover triggered on the ETH BTC ratio. The last time that specific signal fired, ETH outperformed Bitcoin by 132% in the months that followed. That signal's still live. Rising higher lows on the ratio is the first technical confirmation that the flow reversal is structural support rather than just being a 1-week anomaly. Look, 2 months ago, ETH was dead. The flows were negative. The comments section had moved on. The people calling ETH dead weren't wrong about the fee model. They were wrong about what ETH actually is. The people buying $50 million at a time seem to have a very different view of where this goes. The man, Tom Lee, who's bought billions, seems to have a very different idea of where all this goes. The flip is never announced. It rarely is. But there's the data. If you believe the data, if you believe the charts, if you believe the supply and demand mechanics, then ETH, despite it being one of the most hated assets in crypto for a very, very long time now, starts to feel a little more inevitable. When you start to understand the big picture around AI agentic trading and everything that's being built, where do you think BlackRock's going to go when they launch their products? They're not going to Cardano, guys. They're going to Ethereum. Let me know down below if you've been stacking ETH, or if you haven't, what the heck are you guys buying right now? Let me know down below. Thanks for watching.